Trump's tariffs have collapsed, and the US government is now returning money to companies. During this major failure of the system, someone made a lot of money. It turns out the sons of US Commerce Secretary Howard Lutnick were betting from the beginning that this administration would fail, and they earned huge profits because of it. Around $166 billion will now be returned with interest through simple forms. So the question is, who gained from this and who lost? What kind of scheme is behind this major political defeat? At the same time, something unusual is happening in Europe. Norway is planning emergency measures that could keep people at home. One of the biggest oil producers in Europe is now running out of fuel, and the government is considering remote work across the whole country. How it is even possible that a country making a record amount of money from natural resources still run out of fuel? And Hungary. The situation is also changing. It looks like the European Union reacted too early. The future Prime Minister has gained enough support, but in many areas he plans to continue the same direction as Orban. Please leave a like on this video as a small way to support our work. Let's start. Mandatory remote work in Norway. They are sitting on oil and gas, yet still running out of fuel. Would you believe that Norway has fuel reserves for only about 20 days? They could soon run out of petrol and diesel, and this is the largest producer of oil and natural gas in Western Europe. Meanwhile, nearby countries like Sweden or Finland have reserves for 80 to 90 days. Just a few days ago, Norway's Statistics Office reported that March 2026 was a record month for profits from natural resources. Norway sold around 56.6 million barrels of oil for almost 5 million euros. So how they are planning to deal with these shortages? By forcing people to use less fuel and keeping them at home. Low reserves could push the government in Oslo to make serious decisions. This is what Prime Minister Jonas Gahr Støre has already said on an interview. The Norwegian government is considering introducing remote work across the country to reduce how much people travel and lower the demand for fuel. This means that trucks delivering food, medicine, packages and goods to stores could simply stop without fuel. And remember, Norway has a difficult geography and a very spread out population. In a worst case scenario, this could lead to a crisis and most likely a recession. So how did a country sitting on oil wake up almost without fuel? As a failure in energy security strategy, until now it was based on the assumption that petrol and diesel could always be easily bought in neighboring countries. Really? Because of this, Norway didn't see a need to build large fuel storage or expand its refining capacity. As a result, today there is only one refinery in the country. One. And its fuel storage is relatively small compared to the neighboring countries. As a resource-producing country, Norway relied on constant production and easy access to nearby refineries. In other words, they have resources, but they can't put them into a fuel fast enough. The problem is not only in Norway. Across Europe, gas reserves are already low, just a bit over 30%, significantly lower than last year. Because of the conflict in Iran, less energy is reaching Europe and prices are rising. If this conflict ends soon, Europe can recover, but if it continues, this could turn in a much larger economic crisis. So what does this mean? Higher inflation, lower growth. Some experts say that if the Strait of Hormuz stays blocked for a few more months, inflation could rise by another 1 to 1.5% this year. And in the worst case scenario, this could turn into stagflation, a situation where the economy slows down but prices keep rising. Let's hope it doesn't get that far. Despite all of the uncertainty, markets are telling a different story. Surprisingly, markets are moving up as many investors believe the conflict in Iran will not escalate further. The S&P 500 spikes on Friday, stays near those levels, and it's now moving up again. This shows that investors expect some kind of agreement with the US. We can also see strong interest in major companies like Oracle. Over the past year, the stock is up more than 40%. This shows that investors are still willing to buy large tech companies during market rebounds. However, Germany is a different story. While industrial production grew by over 3%, Germany went the opposite direction. In 2025 alone, German industrial production fell by around 1.5%, and it has been declining every year since 2022. At the same time, the Eurozone grew by around 1.4%, and even Japan returned growth, rising for about 0.8% after years of decline. A huge business built on failed tariffs. The son of the US Commerce Secretary made millions, while their father's policy and Trump's tariffs collapsed. The Supreme Court ruled that these tariffs were illegal, and now the US government has to return around $166 billion. What even more surprising, companies didn't need lawyers or long court cases. They can simply file a form and get their money back. This is a major failure of Trump's policy, but behind this decision there might be something even bigger. Because while the government is losing billions, some people made a lot of money. People who may have known from the very beginning how this would end. You might be asking, how did they make that money? Brandon Lutnick and Kyle Lutnick, the sons of US Commerce Secretary, were already betting on this outcome. Here's how. They were buying claims for companies at around 25% on the dollar. Claims for money that could be returned in the tariffs were ruled illegal. Now, after the court ruling, those claims can be paid out in full with interest. And the process is extremely simple. They log into the government portal, confirm which tariff they've paid, and wait for the refund. This could become the largest tariff refund operation in US history, and the timing raises serious questions. There is no direct proof of wrongdoing. Howard Lutnick officially gave up his ownerships when he joined Trump's administration, so formally there should be no business connection. But the situation still raises questions, because while Howard Lutnick was publicly defending Trump's tariffs, his son's firm was already betting that those same tariffs could be ruled illegal, and they were among the first to see that opportunity. So the question is, could they have known how this would end? As early as July last year, when lower courts started ruling against Trump's tariffs, Cantor Fitzgerald began buying these claims for companies at around 20 to 30 cents on the dollar. They even stated they had the capacity to acquire hundreds of millions of dollars in these claims. At that time, confirmed deals were already worth around $10 million. And because many companies were under pressure, they needed cash, and they didn't believe they could win in a court anytime soon. So they sold their rights to future refunds at a heavy discount. And that's where the opportunity was. Today, those same claims are worth the full amount plus interest from the US government. That's a return of around 300% in a relatively short period of time. A very profitable trade. As you can see, those close to the Trump administrations made money even when they failed. Cantor Fitzgerald now denies that these transactions were even took place, but earlier they openly talked about deals worth around $10 million. That contradiction is now being examined by Congress. But in the end, the biggest losers are clear: small and medium-sized companies that sold their claims at around 25 cents on the dollar because they needed cash and they didn't have full information. Today, those same claims are worth the full amount plus interest, so while some made around 300% profit, others lost almost everything. And there's another group that lost. The American customer. For the past 2 years, they were paying higher prices because tariffs are always passed on the buyers, and they won't get a single dollar back. Did the younger Lutnick predict what would happen, or did the older one already know? Or maybe someone else knew even earlier? Let me know, what do you think in the comments. Peter Major has just defeated Viktor Orban, ending 16 years of his rule in Hungary. And across Europe there was a celebration. Many believed Hungary would finally align with the European Union. But this may not be the change many expected. Magyar was once part of Orban's government but left over a corruption scandal. For many votes, that wasn't about ideology, it was about frustrations with corruption and rising living costs. People didn't vote for the new direction, they voted against the current system, against Orban. And while the leader has changed, the direction may not have. The core ideas remain very similar, so the EU's hopes are already starting to fade.